morning, it's Quant Trade Edge, and today I wanted to talk about a breakout that I see in the Russell 2000 Small Cap Index. This is a long-term monthly chart of IWM, and as you can see, we made a big top here in November of 21. It was a false breakout. I actually remember this because I was thinking it was going to break out and go higher. It broke out, reversed, and we had the bear market of 2022. And then we got a retest up there recently at the end of November, and we got a pullback with a higher low, and we're launching from this again. So I do think this is the time that we're going to break through on that third attempt and go higher to something like 300 on the IWM. Now, the purpose of this video was to focus on the breakout that we had yesterday and get into the nitty-gritty and the mechanics of how you could have made 4 times your risk 3 consecutive times, all on the same market yesterday when the breakout was happening. So we had this high and reversal on June 11th, and that was at 2210.90. Okay, and then coming into yesterday, so this is today's bar, this was yesterday's bar, we had an inside bar. You had, 2 dojis, a lot of indecision, and one inside the other. And as you know, I call this the mother bar, 2207. I call that the mother bar. Come on, 2207. And I just gave that a name yesterday because I wanted to refer to it, so I started calling it the father bar. This is sort of like a cup, and then your handle is that inside bar pattern, the tightening, and we should see volume constricting there. I'm sure if we pulled up volume, we would see that. Yeah, there we go, volume constricting there from this day to this day. And then I want to show you what this looks like on the 5-minute chart and how you would have made those trades. So you know what, let me also highlight the low of this father bar, 73.60, 86.40. Close enough. Okay. So yesterday, overnight here, so it's 1 a.m., we broke down through the mother bar and drifted down. And this is the opening bar, the 8:30 opening bar. They pushed this as far as they could, and then a big buyer came in and defended the low of the father bar pattern. And I'm sorry, not the mother bar of the inside day pattern. And we rallied up here, we rallied again. Now here we're taking out the high of the mother bar, which is what I typically use as my entry for a inside bar breakout. And then we also took out the father bar. Now when we took out the father bar, sometimes we get an ABC pattern when we take out a significant level. Sometimes we get a hoagie. Sometimes we get a hoagie with the trap. In this situation, all we got was a buy ante, and that's a very high momentum pattern. So actually, I don't want to take those off, but one of the ways, so the buy ante is a pattern that Linda Raschke made popular. She might have even invented it. And you see the fast line of momentum starts, after making a new high, starts coming off down towards a rising slow line, and then it gets a second leg. And usually the legs are fairly similar in size. If you don't have the 310 oscillator, you can jerry-rig a MACD to do something similar by putting in 3, 10, and 16 as your parameters there. And you can see the same thing. You get this fast line here, pulling back into a rising slow line, and then you get a second wind. So the way we would trade that is to use this bar here as your entry bar and your risk bar. and this bar was about 4 points, if I remember. 4.1, okay. And we went from there, we went about 28 points higher. So on 4 points of risk, you could have made 28 points there. And then how would you know that it was running out of steam here? This bar that made a high contained the next 3 bars. So you had a hoagie up top, kind of a loss of momentum, and then we broke down from that hoagie. This peak happened at about 11:20, so I guess close to lunchtime. That'd be 12:20 Eastern. Now, if you move to a higher time frame at that time of day, you'll see that all that happened off of there was an A, B, C. And again, remember, this is a hoagie, so we're not counting this as an up bar. All of this is a hoagie until we broke lower, so that's your ABC. And this ABC tested right back to the high of the father bar. This low was 22.11.20, and this was 22.10.90, so 3 ticks. So it's amazing how it pulled all the way back and gave people a second chance to reload. So, you know, the first discrete trade was that 5-minute ante trade. Your second discrete trade is this 15-minute ABC, which again overnight got new highs. You got a full retest, which typically on a bar that's a WR4 breaking out, you go get a full retest. And we got that full retest. Now, after that full retest, we had a deeper pullback that would have taken out this level. And at that point, you can move to a 30-minute chart and see that overnight, we had a very clean ABC again, A, B, C, and this opening bar is our risk bar again. So this could now be the entry for the third trade of this series. And it would be expecting new highs on this again to about 22.50 and possibly higher. So think of it as a set of discrete trades. That way, after you have a trade that makes a profit, you can increase your size on the next trade. And then you may, if you have 2, increase your size on the next trade. And that's how you will roll your account upwards when you have a good streak of trades like that. So anyway, this is what I wanted to say about the Russell. Hopefully I'll be back and making more videos. In fact, this is the second time I'm making this video because I forgot to turn the mic on the first time. I guess that's how long I've been away. But anyway, I'm glad to be back. Hope you enjoy this. If you like this type of analysis, this was all patterns and things we were calling out live in the Discord. I'll put a link in the description. Thank you.